All right, so the next section that we're going to be dealing with is going to be bank reconciliations, okay? So we talked about cash, right? We talked about how we received money and how we make payments, right? With the various forms of cash, right? We also talked about receivables, about how we receive payments and that will lower customers' accounts payables, right? But we also talked about bad debt. We talked about how money can change its value over time. So in this case, this is where it ties up that when we do bank reconciliations, because when we are keeping track of our own books, right? We need to find some kind of way to compare our books to another entity to make sure that our money goes through. All right? Because here's the thing about reconciliations, right? Reconciliations is where, when on our end, right, every time we write a check out, right, in our books, we already write it off of our books and saying it's been paid off. But if you remember, right, checks have a holding period, right? Checks have a 2 to 5 business days holding period, but that's only upon if someone received it and decided to cash the check out. Now, second thing too is it also has a value with a time period that allows you to hold that value until for up to 6 months, I believe. So therefore, a a vendor can be holding on to that check for 3 whole months and that money will never go out of our bank account, right? Same thing with when we receive other payments from other customers, right? Of course, our duty is to go ahead and put into the bank, but sometimes there's also occasions where they might write a faulty check and the money might bounce. We are constantly making deposits every day. So in this case, right, that's the thing about bank reconciliations is this is what we should do at the end of every month to adjust the amount of money to make sure that these transactions actually go through. Okay? So again, we talked about a check, right? The check has a holding period up to 6 months. And on top of that too is because of the date, you can send the check, but you can also time stamp it to be available for a certain time period, okay? So again, I can write a pre-made check already that says you can't take the money out until a week later. All right? So that is what you can do with checks. But again, we have to understand that checks end up having that 2 to 3 business holding period where we send it out, the person has to receive it, and then they have to go put in their bank account and so on and so forth, okay? So because of that, this is our check register, right? We're keeping it on our books that we are keeping a good close record of what the checks that we've written out, when we've written out, who do we write to, and how much we've written it out for, right? So this is our way that we keep track of our money is by having a check register, right? We're going to be updating our own cash ledger itself if we have one, okay? But a check register pretty much is where our money's going out, and then every deposit that we make will also be updated in our ledgers. Now, here's the one thing where we can compare to an entity, right? Because the most accurate information that we can get is the bank institute itself, right? Because the bank institute is what's keeping track of all the checks that actually have cleared and all the deposits that we've made and any other forms of payments that we either received or any withdrawals that we've done. So again, a bank statement is a way that we can compare our books to what they have on record to make sure that did those transactions go through. And if they did not, we can have to either call the vendor, or usually if we actually write a check at the end of the month, right, it's obviously not going to clear until the following month, okay? So that's what we're going to have to do is we have to compare our books to the bank statements. Now, here's the beauty of bank statements is they always send you out one every single month, right? or every time your statement period is going to be. But usually for banks, it's usually the beginning of the month all the way to the end of the month. All right, they give you a whole month's worth of time period for the bank statement. Here are some few terminologies that you will need to be recognizing. So EFT, again, is an electronic funds transfer. So if that was a form of payment that you received, well, that could be a possibility, right? Yes, you can accept, a transfer. Maybe it was an online payment, right? Whatever means that you collect your money, right? Another thing is going to be ACH. ACH stands for Auto Clearing House. Usually, when you have online payments, or if you have a payment plan where you're collecting money through that type of transference, it goes through as Auto Clearing House. And then an NSF is going to be non-sufficient funds. So if you write a check or someone writes a faulty check, you're going to get flagged NSF as a non-sufficient funds, okay? Usually, again, if a check bounces, they'll give you an actual error where it will say return check or bounce check. But if you write that check out, sometimes the bank will push it through, but then they'll end up flagging you down saying you didn't have enough money in your bank account, and then they'll charge you a fee on top of that. So there's a lot of things that can happen when you're dealing with your bank, and that's why the best kind of rule of thumb is you definitely want to keep checking your bank account frequently, because the idea here of you keeping track of your own money is to ensure that you do not write a faulty check. Okay? And of course, the person that's going to be backing you up will be your bank account. But you have to remember, every check that you write will eventually be cashed. So just because you wrote a check out and your bank says that you have all XYZ money, right? And you write another check out, right? And that person decides to cash that check that very same day, you can go into problems that way too. So general rule of thumb is you want to be very careful when you are dealing with your money, and the best way to compare and to make sure that your transactions have gone through, such as your payments or such as you receiving your payments, is through a bank reconciliation. So here is usually what a bank statement would give you, right? You'll get the beginning balance, you get the ending balance, and then all the transactions that have occurred within that time period. Okay? And of course, you yourself are also going to have a cash ledger, which allows you to make note of all the money that's coming in, all the money that you spent, right? Whether it's called a cash ledger, a checking register, whatever it is, right? As long as you can identify that this is your bank account, okay? And again, you'll be using a debit credit system on your books, right? So that's what you're doing. You're making sure that you're keeping track of your transactions through your ledger, okay? Whether it's cash, checking, or whatever type of that represents your bank account. Okay, and again, it's a day-to-day transaction, so you yourself would know how much money you have at the end of the day. But again, this is not going to be reflective of what your bank account is because of that 2 to 3 day transfer period, right? Okay. So how do I complete or do a reconciliation? So again, bank statements happen, usually you receive it by the end of the month, okay? And what this is this is an adjustment entry because you need to adjust your money accordingly. So then when you start the next accounting period, whether it's the month or going on forth, right? If you close your books out at the end of every month, then a bank statement or a bank reconciliation is necessary, right? So you know how much money you're going to be starting off with in the next month, okay? Now, that also flags you down to make sure that which checks have not cleared yet, which deposits have not cleared yet, and what kind of transactions that you're still pending on, okay? So how do I complete a bank reconciliation? Well, first, I need my bank statement, and I need to compare it to my books, which is either the cash ledger, checking register, whatever it is, okay? It's your ledger. So that means, how am I comparing them? Well, let's start on one side first, and then we'll go ahead and talk. We'll actually physically do an example right here on this exercise right here. So when we're dealing with the bank side, right? We look at the bank statement, right? We're gonna start off with our ending balance. Okay, we're going to add any deposits in transit. So that means any money that we've deposited that has not cleared yet is going to be considered a deposit in transit, right? It's being processed as of there. It hasn't cleared into the bank yet. So we call that deposits in transit, okay? And then outstanding checks will be the next one, will be something that you're going to subtract because that's money that you written off that has not cleared yet. So in this case, that's what an outstanding check is, where we're going to compare our checks and see which ones have cleared and which ones have not. And we're going to subtract that from our ending bank balance, okay? So then you're going to get a new ending balance, which should match your cash ledger, for instance, okay? Now, on our cash ledger, things that we don't know that the bank has done to us is what we're going to be putting into our ledger. For instance, right, if we charge interest for our customers who pay online, right, because they're using the internet to pay us, or they're using an EFT to pay us, right, there could be a convenience charge that you put on your customers to collect interest off of, okay? So again, that could be something that you don't know because your bank is going to be in charge of collecting all that money for you. So that's why the bank statement's going to tell you, hey, this is how much money you've collected from all of those interests that you've had your customers pay through. So there, you're going to be collecting your auto clearinghouse, your interest, and anything that is related, okay? And of course, what you don't know as well too is you don't know that the bank is going to charge you for all the fees that occurred, right? Of course, you know because you agreed, right? But what I meant is you haven't updated it into your books. Okay, you haven't acknowledged that you had incurred a few bank fees. So again, service fees. So again, if you are a business, right, you are obligated to pay service fees. Okay, for the reason being, if you accept credit card payments, that's a service charge, right? You're using the bank to collect it for you, so they're going to charge you service. Especially if you go through the bank and have them print out your paychecks for you, right? That's a service fee that they have to charge you, okay? And of course, any other fees, such as if you wrote an NSF check, right? If you withdraw too much money out of your bank account, what happens? You get a withdrawal fee, right? An overdraft fee, right? So there's many things that you can be charged for, and that's something that you're going to subtract. So again, you're going to start with the ending balance in your cash ledger, and then you're going to add any money that you've collected from the bank, and then you're going to subtract any fees or anything like that. And then again, the new balances should match at the end of the day. So let's go ahead and do our example right here to complete our bank reconciliation. So let's go ahead and start with the bank side first. We first need our ending balance on our bank side. So where do we be able to identify that? On the bank statement, it should tell you right here that you started out with the month of, in this case, I started off the month of April 30th here, right? Or in this case, May 1st. That I started out with X amount of dollars, and then after all the transactions that have cleared, you are now left with $9,446.40. So that's your ending balance in your bank statement. So that's the number you're going to start with here, is you're going to plug that in, okay? Then the second thing is you're going to add in your deposits in transit. So where am I going to be comparing this? Well, I got to see how many deposits I have made to the bank and compare it to my deposit slips that I have kept records on my books, okay? So for instance, right? So on my books, I said that I made a total of 2, 4, 6, 7 deposits, right? And on my bank statement, because usually, typically, when you deposit money at the end of the month, usually, again, that holding period, right? If it's a weekend, it won't clear until the following uh, business day. So if you decided to do it on Saturday, it will not clear until Monday or Tuesday, right? That's what it means. So if the end of the month was on a Saturday or on a Friday and you decide to go around 6 p.m., same thing will happen, is that the bank won't process it until Monday, and the money might not be there until either Monday night or Tuesday. So in this case, most likely the last deposit you usually make won't clear until the next month. Okay? So that's one way that you can determine it, right? But this is how we're going to do. We're going to compare all of my deposits that I've made so far, and I'm going to compare it by looking at all the numbers that actually cleared on my bank account, on my bank statement, right? So in this case, I have my deposit for 421. I have one for 422, 423, 424, 425, and 426. However, I made 7 deposits. So in this case, deposit number 4427, which I made on the end of the month of May 30th, has not cleared in my bank statement. So therefore, I need to add this money to my bank side. Okay? Because they don't know that I made a deposit. Okay? So therefore we need to record it on their books, because eventually it will end up being in their it will end up clearing soon, right? Right now it's in transit. It's being processed. Okay? Now that we did that one, the next one is going to be looking at any outstanding checks that we have written that the bank doesn't know that we wrote and sent out. Okay? So now we need to compare our check register to the bank statement, right? To see which checks have actually cleared from our bank and which ones have not yet cleared. So in this case, right, I would take a look at my total checks that are written here, right? I wrote check number 125, right? And we're going to compare on our bank statement which one actually has cleared. So right here, 125, 126, 127, 128, 129, 131. So in this case, that was it. So we end up skipping 130, okay? We end up skipping, or actually, in this case, they never processed 132 and 133. So therefore, these are 3 checks that I've written out that has not cleared yet, and the bank doesn't know that. Okay? Maybe they're in transit, or 2, they're being sent out to that vendor right as of that day, right? So the vendor hasn't received it and put into their bank account yet. So in this case, right, we need to keep in mind that we have 3 pending checks that are going to be taken out from the bank. Okay? So again, check number 130, 132, 133 for the amount of $846.52, $1,125.22, and $245.22. So that means we need to subtract that money out from my bank account because they eventually will clear. I've already written it out. They haven't cleared yet because the person who's receiving it on their end hasn't received it and deposited into their bank yet. So these are 3 pending checks that have not yet cleared. So therefore, we need to subtract that money out from my bank account because it will eventually clear and be taken out from my bank account. So in this case, right, so now we need to go ahead and do our math, right? We're going to start out with our ending balance, right, of $9,446.40. We're going to add my deposits and transits of $254.52, and we're going to subtract a grand total of those 3 checks that haven't cleared yet for a grand total of $2,216.96. So I get a grand total of $7,483.96 after we've gone through that, right? This is my new adjusted balance. Okay? So now that I've done that, I've only completed one part out of two, right? I have to complete my checking side in order to get this same exact number. And if I don't get this number, I have a discrepancy. That means something has not been recorded and we don't know where it is. So we have to figure it out. But if we do end up matching at the end of the bank reconciliation, we're successful. We completed it and made sure that all the transactions were accounted for. So now that we finished the bank side, let's figure out on the cash side, right? So the cash side, we're going to be thinking about, what does the bank know that we don't know? Well, the bank knows they collected money for us, and they know that they charged us, because usually they don't tell you, hey, you're going to get charged a service fee, right? You usually find out by looking at your statement, right? No, especially when you're getting an NSF, right? They're not going to tell you that your account got overdrafted. They expect you to do that on your own and be responsible to check your bank account frequently to figure out that you got charged. So in this case, right, that's how we have to understand it on our side, is we need to know what the bank knows that we don't know. So in this case, we're going to start with our ending balance in our ledger. How do we read our ending balance in our cash ledger? Well, usually you're going to go down to the very last transaction of that month, right? And in this case, I'm going to look at my account balance. So right now, I currently have a debit balance of $7,338.96. And that is your current cash in your cash ledger account. Okay? So in this case, that's my ending balance is $7,338.96. Okay? So first thing we're going to do is we're going to recognize is, what was the total interest income that I've collected from the bank. Now in this case, you'll find it on the bank statement. It will tell you right at the bottom, right at the top. Usually it will tell you at the top, okay, that this is the money that you worked, that the bank has collected for you. So in this case, interest of $15 was collected, and $215 of auto clearinghouse has also been collected for you. So that means I need to plug those numbers in, because that is money I've earned from the bank. Okay? In this case, so that gave me a grand total of $230. You're going to add that to your ending balance. Okay? Now, things that you need to subtract are going to be fees that the bank has charged you. So let's take a look. Usually, those fees are going to be at the top of your bank statement, right? To let you know that you got charged service fees for $50, and you also got a return check fee for $35. That means someone wrote a check and you got it bounced back, so it ended up getting a return check. So again, if you put in a faulty check from a customer, you get charged on your end too for the inconvenience of the processing fee. Okay? So in this case, there you go. You got charged $35. So in this case, you got a total of $85 worth of fees that needs to be subtracted. Okay? So then now we do our calculations. We're going to start with our ending balance once again. We're going to add the money that we earned, and then we're going to subtract the money that we got charged for. So in this case, right, that should give us a grand total of $7,483.96. And success. We end up matching on both ends. That means we verified that we got all of our transactions cleared up, right? And we know exactly where they're going. All right? Any questions in regards to the bank reconciliation? Okay? So, once we completed our bank reconciliation, your job is to journalize things, because you need to make sure that you update your checking account. Okay? Because again, since you added money from interest, right, you're going to do interest income. All right? And of course, you also had to subtract money because you had to pay some bank service fees, right? They're not going to tell you they're going to charge it to your account right away, right? So in this case, you need to update your checking account by journalizing the interest income that you collected and the bank fees that you were charged. Okay. So, chapter review, once again, we talked about chapter 10.2, which was interest, right? This is what I want you to at least know is at least simple interest and compound interest. You only need to know for this formula here, not the other formula that I was talking about when it comes to a bank loan or anything like that. I will not test you on compound interest because I have to assume that not everybody has the nice expensive calculator and that not everyone is or has the availability to use Excel. Okay? All right. So those are the formulas that I want you to look at, okay? And then bank reconciliation is the last thing that we just looked at. So how do I memorize the bank reconciliation? Well, here's a mnemonic device for you, okay? When you're looking at your bank statement, you're going to do, right? You're going to calculate your deposits and transits and your outstanding checks, right? You're going to do, okay? But when it's on our side, the check ledger, okay, or cash ledger, right, on our books, you're going to have ifs, right? You're going to be calculating interest and you're going to be calculating your fees, okay? Now, as far as that, I would let you know this, that's just as far as I'll go when it is to testing you, is I'll be testing you on your do's and I will test you on your ifs, okay? And then at the end of the reconciliation, the new adjusted ending balance should match. Okay. All right. Any questions in regards to 10.3? Okay. So there are two problems that I have uploaded for you. One of them should say problem 1 and then the other one says problem 4, okay? So let's go ahead and do the very first exercise here. So in this case, this is problem number 1. All right, so you can actually ignore these checks. This is just copies of your stubs, okay? You can choose to ignore or you can choose to utilize it as a means to double check your transactions, okay? So here you go. I give you your bank statement, okay? I also provide you your cash ledger, okay? So this is your checking account, all right? As well as your deposit slips, as well as your check register itself, okay? So here is the table that I am wanting you guys to do your reconciliation. All right, you got the bank side on the left and you got the cash side on the right. So which side do you want to do first?
Bank statement.
Okay, let's do bank statement. So the first thing you got to do is you need to figure out what your ending balance in your bank statement is. So let's take a look at my bank statement. What is my current ending balance? Let me make this a little smaller. All right, what is my current balance, ending balance in my bank statement?
$1,055.
Okay, so 1055. Okay, is what I'm going to start out with. So in this case, what do I need to add to my bank first? Deposits in transit. So let's compare my deposit slips. So here, my register for my deposit slips. So receipts is the money that you collected, and then the deposits is when you actually deposited it, okay? So in this case, how many deposits have I made so far in the month of August?
5 total.
You made a total of 5 deposits, okay? So let's take a look at my bank statement. How many of them actually cleared?
6.
Let's count again. Deposits.
Oh, deposit 4.
4. Okay, so that means we're missing one deposit. So this is where you're going to compare, right? So we have the first deposit of 100, second deposit for 350, third deposit for 400, and the fourth deposit for $225. So let's verify which is true. So in this case, did I deposit for 100 for the first one? Yes, you did. Did I make a deposit for 350 for the second one? Yes, that cleared. Did I make a deposit for the third one for 400? Yes, it cleared. And then the fourth one was $225. So that means, which deposit am I missing?
The last one of $30 on August 30th.
Yep. So deposit on August 30th. So again, August 30th, deposit for $30. Okay. So now, what do I need to subtract from my bank account? What do I need to subtract from my bank account?
The checks that hasn't cleared.
Yes, outstanding checks. So in this case, let's take a look at my check register. How many checks have I written out for the month of August?
8.
You wrote 8 checks, okay? And they all have check numbers on them. So let's actually take a look at my bank statement. How many of those checks cleared?
It cleared a 5 and then 7 plus 5 cleared and 6 one flagged because we didn't have enough money.
Okay, so in this case, right, the bank pushed it through because it was only $30. But they did charge you. So just as you can see at the top right here, they charged you for that non-sufficient funds because they pushed the money for it for you. Okay? So in this case, right, let's review. Look at the check numbers. Which check number is not in sequence? So which one's missing?
We are missing 3 and 8.
103 and 108. So let's go ahead and take a look at my check register. Okay? So 103 was for $20. Okay? Oop. Let it undo. Okay? So check 103 was for $20. Okay? And then check 108 was for another $20. Okay? So let's go ahead and record that I had check number, check, or in this case number 103 and number 108 for $20 here and $20 here. So that means I have a grand total of $40 I need to subtract. Okay? So now that I've finished this, right, let's go ahead and do our calculation. So if I started out with $10.55, I'm going to add $30 worth of deposits, and I'm going to subtract $40 worth of outstanding checks. So what is my new balance?
$10.45.
$10.45, okay? So then we're not done yet. Now we need to compare on our side whether our numbers are going to match or not. So in this case, so we're done with the bank. So now we're going to figure out what my ending balance is in my check ledger. So let's take a look at my cash ledger. Okay? What is my ending balance in my cash ledger?
$775.
Good, right? Because at the end of August 31st, the last transaction was I wrote or in this case, I wrote a check for $20, which left me with $775 left in my cash ledger. So in this case, that's where I'm going to plug it in, is that I currently have $775. Okay? So what am I going to add in my cash side? What do I need to add on my cash side?
The credit that we didn't know we had.
So what do you mean by credit?
Oh, I'm looking at the bank statement. It's in the category of the credit on that bottom.
Good, right? Because it's their side, it's considered a credit to them, right? But on our side, it's considered a debit, right? Because it depends on who's looking at the books, right? So in this case, I got credited money, all right? So I got an auto clearinghouse for $250, and I got interest to be collected a total of $50. So, well, I got to update that, right? I have auto clearinghouse for $250, and I have interest worth $50. So that means I'm going to be adding $300 to my cash side. Okay. What are things that I'm going to be subtracting on my cash side?
The fees, the money we are charged.
Okay, so in this case, that should be at the top of your bank statement. So what did I get charged?
Service charge of $20.
Mm-hmm. And I got charged that NSF fee, right, for non-sufficient funds. I got charged $10. Okay, so in this case, $30 worth of fees. Okay, so that's what I need to do. I need to update that I got a service charge of $20, and I got NSF fee for $10. So therefore, I need to subtract a total of $30. Okay? So let's go ahead and do the math. If I started out with my cash side of $775, I'm going to add $300 worth of interest we've collected, and I'm going to subtract $30 worth of fees that I've incurred. So what is my adjusted ending balance?
I have $1,045.
Good. And we match on the bank side, so that means we did this correctly. Success, right? We accounted for every transaction that we had. No discrepancies here, okay? This is an easy problem, and this is what you're going to be tested for, okay? All right? Just doing your do's and your ifs, okay? So let's go ahead and do a little more challenging problem here. So let's go ahead and complete problem number 4. Okay, so once again, we're going to do another bank reconciliation. You can ignore the checks here just because, again, it's only for reference points in case you in case you wanted a copy of the check that you wrote. Okay, here's your copy of your bank statement. Okay. Here's a copy of your cash ledger as well as your check register and the deposits you've made. Okay, so, and here's your table. All right, so in this case, right, which side do you want to start on first?
Register, cash legend,
You want
ledger.
to do the cash side first?
Yeah.
Okay, let's do the cash side first. So in this case, we need to start with our ending balance in our cash ledger. So in this case, here's my cash ledger. Okay. What is my current balance in my cash ledger?
$23,995.79.
Okay, so 2399579 is what I am going to begin start off with in my cash ledger side, okay? Okay, 2399579. So what do I need to add in first?
The bank credit they gave us.
Okay, so let's take a look at our bank statement. Okay, so here's your bank statement. What have you been credited? What did they give you?
They have an automatic deposit for us, and then the interest.
Good, right? We got auto clearinghouse for $550, and then you have interest worth $1,237.22. So $550, $1237.22. Okay, so that's what I'm gonna put in my side here. So we got ACH for $550, and we have interest for $1237.22. So, how much in grand total am I gonna be adding to my cash side?
We have $1,787.22.
Okay, good. All right. What are we gonna be subtracting out from my cash side?
The fees that they charge us.
Fees that they charged us. So let's take a look at my bank statement. What did I get charged? Well, here I got charged service charges. Okay. I got a return check fee. And I actually got a bounced check. Okay. A bounced check for check number 195. Okay. So in this case, what are my total fees here? So I got $50. I got $10 for the return check fee, and I got an $850 return check. So in this case, so we got service charge, $50. We got return check fee of $10, and we got a return check. I got a okay. So a return check for $850. So let me double check that. So we got return for 10, $850, and $50 for service charges. So in this case, in grand total, how much money am I going to be subtracting out?
$910.
$910. So now that we completed this, let's go ahead and calculate our total. So if I started out with $23,995.79, I'm going to add $1787.22, and I'm going to subtract $910. What is my new adjusted ending balance?
$24,873.01.
Okay? All right. So again, we're not done yet because we need to complete the bank side and compare from there. Okay? So let's take a look. What is my ending balance on my bank statement? So let's take a look at my bank statement here. Okay, so what's my ending balance?
$24,594.72.
Okay. $24,594.72. So what am I going to add in my bank?
The deposit that didn't post on the bank statement.
Okay, so let's take a look at my deposit slips and compare it to my bank statement. So in this case, how much money in grand total, or how many deposits have I made so far?
Five.
We got 5 deposits, right? So let's see how many actually cleared on my bank statement.
He only posted a 4.
You only posted 4, so how many, which one am I missing? Got 430, 890, 1281, and 1670. So which deposit am I missing?
The last one on August 31st.
Last one for August 31st, right, for this $400. So in this case, deposit for August 31st for $400. Okay. Okay, so what do we need to subtract? Okay, from in our book, in the bank.
The checks that hasn't been cleared.
Okay, so here's our check register. So how many checks did we actually write?
$11.
Okay, we wrote 11 checks. So let's see how many of them actually cleared on our bank. So here's the checks. They have the check numbers right here. Okay.
6 of them?
6 of them. So that means we're missing 5 checks. So in this case, we got check number 872, 73, 74. We're missing 75, 76, 77. We're missing 78. And we have 79. Okay, so again, we're missing 75 and 78. Okay, in that sequence, right? So let's take a look at our check register. Which ones are we missing? Okay. Well, we don't even have this 846, so that's for sure missing. We got 72, 73, 74. Here's 75. We're missing 75. 76, 77, 78. Here's 78 that we're missing. And 79 is there. And we are missing the last 2, which is 80 and 81. So there is the 5 checks that we're missing. So starting from the top one, you got check number 846 for 320. So 846 for 320. 846 for 320. Okay. You have check number 30375 for $49.21. Okay. Then we have check number 78 for $275. Okay. Oh, sorry, 275, my bad. I put 250. All right. Then we have check number 80 and 81 for 401 and 186.50. So 401 and last check here was for 186.50. Okay, 186.50. So in this case, how much in grand total checks have not cleared yet?
$1,631.71.
Okay. So let's go ahead and do our math here, right? We started out with $24,594.72. We're going to add $400, and then we're going to subtract $1,631.71. So what is my ending balance in my bank account?
Oh. I have. It's not matching.
That's okay. Tell me the number.
I have 23,363 and then 1 cent.
Okay. So there you go. You recognize we have a discrepancy. That means there's something else that we are missing. In this case, I am off by a lot. Can you calculate the difference between the two right now and tell me what is the difference?
Yes. $1,520.
I am missing $1,520, you said?
Yes.
Okay, so I'm missing $1,520 somewhere in the midst of my transactions. So I need to go ahead and figure out where I went wrong or where I have a discrepancy. So best rule of thumb is you're going to go ahead and verify every single transaction that you recorded in your books and then verify that it actually went through. So in this case, we're going to start off with our cash ledger because that's the most important because this is where we kept track of our money. First thing you got to recognize is, did I start out with my bank account? Did my beginning balances start out the same with my cash ledger and my bank statement? So right now, if let's add that $320 back into this, so you should have, 27, 26.50, right? Did that match my beginning balance here in my bank statement?
No.
Well, okay. So add that 320 back to this because that's the very first transaction, right? What did you start out the bank balance with? In this case, if I add that back, right, that's going to give me 27 to 650, right? Is that what I started out with? Good. Now that we verified that we started on the same page, right? Where did I go wrong? So let's go ahead and start with one transaction at a time. First thing I did was I deposited, or actually I wrote a check out for $320. Okay? And is that true? Yes, but in this case, I found that this check hasn't cleared yet. So that means we've already added it to my bank account that we are subtracting that money out from my checking account. So that one is good. Right? Next transaction here was on July 31st, right? In this case, it doesn't look like anything happened here. But let's see what happened else. So then August 1st, we had a deposit for $340. Now let's go ahead and see, is that true? Okay. So my deposit, right? Oh no, what's this? I deposited $430 and that's what my bank recorded is I deposited $430. Okay? Now that's weird because how can a deposit of $430 go through if I recorded it in my books as 340? So who's right on this case? Can you say I went to the bank and deposited $340? And then the bank records it as 430?
The bank is right because they always do the balance at the end of their business day.
Usually, that is true. That is very true. But also, right, on your books, you may recorded it in your ledger wrong, but on my receipts, I recorded it as $430. So who's in the wrong here?
Ledger.
The ledger. Now, how much is the difference between 430 and 340?
$90.
Now, is that $90 that I'm supposed to be increasing in my cash side or decreasing?
We actually have $90 less cash than what we think because of the number.
Well, okay, look at this way, right? You only record that you only received $340 cash. When in reality, you deposited $430.
So we have actually $90 more.
We have $90 more. Now, is that going to show up on my books or the bank's books?
My books.
My books. I have to add that extra $90 into the cash side because that's the missing money I am missing, right? So in this case, we're going to add the $90. So missing okay? Missing $90, okay? So that means how much am I going to actually increase my account by? $90. So that's going to be what? 7, 8. Is that right? Is that $90 more? So therefore, I need to add $90. So what's $90 more? Right? Is that $90 more?
No, you have to go 24,973.
24,973?
Yeah, you had 83. So
All right, just redo the calculation again. So 23,99579 plus 1877.22 plus minus 910. What does that give you? I think this is supposed to be
24,963.
yeah. Okay, there you go. So I had it right. Okay, so 24,963.01. Okay, so I found one discrepancy. All right, but my balances are still not matching. I'm still missing how much money? What's the difference now? Okay, so
1,230.
1,230?
No, 1430.
1,430 is the difference?
Yes.
6301 and 6301 should give you
Oh, gotcha.
so I'm off by I think I'm off by $1,200. Yeah, I'm off by 1,200. Okay? So I am missing $1,200. Okay. Okay. So let's take a look at continue going on forward. So next, let me see. So we cleared off that we made our discrepancy right here, right? We added the $90 to our cash side because that's money that we're supposed to add back to our cash side. Okay. Then the next thing is you wrote a check for $50. Is that true? Yes, you did, and that did clear in my bank account. Okay. Next, we have here on August 9 is that you deposited $501 and then you also deposited $389. So let's verify that's true. So $501 plus $389. Yes, you deposited a total of $890, which cleared your bank. Okay. Okay, so let's see what's next. Then we wrote a check for $150 and then another one for $20. So is that true? Yes, we wrote $150 and $120 and $20. So that cleared in my bank account. Okay. Next we have here we deposited $431 with an $850. And then we had $545. So let's see if that actually cleared. Okay. So in this case, let me see. I recorded $431 plus the $850, and then here's the $545. So I didn't clear that. I didn't deposit that one. I deposited it separately. So in this case, right here, I deposited the $1281, which cleared my bank. Okay, and that $554, I'm waiting for the next deposit for that one. Did I write a check for for $49.21, and then another one for $200. Let's see. Yes, I did, but I verified that it hasn't cleared yet in my bank side. So in this case, that is all accurate. And I did write another check for $200, and it did clear. Okay. So then the next one is I deposited $500 and another $625. So is that true? So here it is, the 545, the 500, and the 625. Grand total came out to be 1670. So yes, that did clear. Okay. All right, so that did clear. So this, we're right here. Okay. Did I write another check for $560? Let's see. Yes, I did. Okay. Let's see. And then I deposit $575. Let's see. In this case, no. My last deposit was $400. So I am missing this $575. Okay. Did I write a check for $275? In this case, yes, I did, but it did not clear through the bank yet, right? Did I deposit for $625? No, I didn't, right? The last deposit I made was $400. So in this case, I have two deposits I have not made yet. So what does that mean? Does the bank know I have this money on hand? I mean, on the cash side, I know I have this money. This is cash on hand that I have in my bank account on my books. But does the bank know that? So this would be considered a deposit in transit that you would have put into the bank. Okay? So in this case, let's calculate it. $575 plus $625. What does that give you? It gives you exactly the $1,200. So eventually, what you're supposed to do with this money is you're supposed to deposit that money. Okay? So in this case, that's your missing deposit that you have right here. So you can say this is cash on hand, right? Worth $1,200, right? So 575 plus 625 will give you $1,200. And let's adjust our numbers. And what do you get? You should get that 2496. Yes.
I just want to say I gave you a longer number for the bank statement.
What do you mean?
The less I gave you $1,600. I think it's supposed to be 1231.
Let's see. 0 plus 9 is 9 plus 5 is 4. 5 plus 6 should give you 11. Okay. Actually 21. So then 2, 4 plus 8 plus 7 is 15. 16, 17, 18, 19, 20, 21, 22, 23, 24. Okay, so yeah, it should be 12. 2, 3, 1, and then you carry the 1 over. Okay, so it's 1231. Okay. So it's okay. I mean, at the end of the day, you know, your calculations, even though you maybe calculate it on your hand, 1231 instead of 1631, it still got the right answer. If that made any sense, because you gave me the wrong number, but you calculated correctly. Okay, so there you go. When you add that $1,200 cash on hand, you now get 24,963.01, and that matches your ending balance of that 24,963.01 on the cash ledger. So in this case, that is it. That is how we do a bank reconciliation, is that once you've done your deposits and transits and your outstanding checks and you've confirmed your interest and your fees and you still get a discrepancy, you need to go through your books to find where the mess up, mistake, discrepancy is. In this case, we found missing money and we also found cash that we had on hand. All right? Okay, well, any other questions?